A win percentage of 91%, a win percentage of 84%, a win percentage of 86%, and even on a stock that's not as strong, still a win percentage of 89%. And you can accomplish all this by only spending 5 minutes a day looking at stock charts. If those statistics are of interest to you, then you're going to want to watch today's full video, as we are going to build this strategy step by step, as well as the scanner to find the stocks that are matching the setup step by step. This is a reversal strategy, but it's unique and it performs at such a high average win percentage because it only buys reversals on strong stocks. In fact, that is rule number 1 of the strategy. The low of the current candle on the candle that you are considering buying must be above the 200 simple moving average. So the low of the current candle must be greater than the average closing price out of the last 200 bars, which is represented on the chart as this cyan line. The importance of that can be showcased here on ticker XYZ. This is a ticker that I enjoy utilizing for backtesting and optimizing strategies because it's had both a period of very strong up and very strong down alongside a period of consolidation. Well, utilizing that unique rule of the low of the current candle must be above the 200 SMA, you can see we are buying the dips on the strength, but as soon as the stock enters backside weakness, we are no longer looking for long opportunities on this ticker. We dodge all of this downside, and that's why even on kind of a ugly looking chart like this, we are still able to pull out an 89% win rate. Before I jump into rule number 2 of the entrance conditions for this strategy, I'm actually going to be very nice and I'm going to go ahead and give you the TOS share link for this strategy so that you can turn the strategy on your own chart for completely free right now. I will put the TOS share link in the description of this video down below, but also in the description of this video down below will be a link to my website, and I'll just show you quickly how you would access the share link to this strategy from there so you can understand how this works. Into our codes from the homepage, into then the ThinkorSwim logo. I am of course looking for strategies, but there are also over 130 plus other coded strategies, scanners, studies. You can even copy my exact workspaces I use to trade every day, etc., etc. I'm looking for a strategy. This is a swing trading strategy, and this is my reversal strategy. So I'm going to click into this, and that will give you, first off, an explanation of what the strategy is, exactly how to set it up, because you will need to allow up to 10 orders in the same direction. I'll talk about that in a second, but here's an image of how to do that. So when we get to that part in the video, you know what to do. Now you're going to come down to this share link. You're going to copy this. Every single code, every single one of the 130 plus codes on my website comes with one of these TOS share links. You're going to go to setup in the top right. You're going to open shared item, paste in that share link, preview, and you can see you are importing the DTS reversal swing. Go ahead and import that. Now back within your edit studies modal, instead of a study, if you imported a study, of course you would just search for it here. But since you imported a strategy, click on the strategy sub tab, look up DTS reversal swing, double click on it, and you will now have this strategy running on your chart for completely free. Hopefully you enjoy this free code. If you do, consider signing up to access the over 130 plus others over on the website. So the stock must be macro strong. Next, we need to identify when the stock is currently weak, when it is currently on a dip. So what do we utilize to objectify that to build the strategy and scanner around to take advantage of these sort of trade setups? For that, I am going to come in and turn on the RSI study. I'm also going to quickly adjust the oversold level from 30 to 40, as that is the level in which we begin entering trades utilizing this strategy. So macro strong, low of the current candle must be above the 200 simple moving average. Currently on a dip, the current candle must close below 40 on the RSI value. When both of those are true, the strategy enters the trade. Now, unique rule set number 2 of this strategy that you are probably noticing as I zoom in here is that we don't only enter once. I have this strategy set up to enter up to 10 times. So as long as obviously both of our conditions are met, the strategy will continue buying up to 10 times, scaling into positions. This is how I like to take advantage of reversals, because reversal trading is typically very hard and beginner traders typically lose money attempting to do it for multiple reasons. But the most obvious of which is that timing the bottom on a move is very difficult. When you begin to scale into positions like that, you broaden your time frame for timing that bottom. I begin entering target here at 161 and a quarter. The stock then drops all the way down to 156 and a quarter. It drops down 5 more points. You're like, well, holy crap, that entrance was terrible. And you're not necessarily wrong. It was terrible, but I only entered with 1/10 of my position size that I'm willing to take in this trade. And then I got to buy 3 more times before the bounce occurred at much lower prices. And I ended up making from 17.3 to 18.2, ended up making $900 in this trade, even though that first entrance was pretty atrocious. There is only one exit condition to this strategy, and it is extremely simple. I'm actually going to hop back down into the settings of my RSI study and change over bought to 45 just so we can visualize it, as that is where we exit trades utilizing this strategy. We are once again trading a reversal strategy. We know we are buying current weakness. So when you're buying weakness, you shouldn't expect massive turnarounds, like massive moves out of them. Does it happen from time to time? Yes, of course so. Everything happens from time to time, but active stock trading is all about taking advantage of what is more likely to happen. And in these reversal scenarios, getting the exit on the sort of first sign of strength is what I have found works best. So that exit at 45 RSI, lock in profit. Just one buy here, get the quick bounce, RSI's over 45, lock in the profit. You get a lot of buys here during the weakness, but on the first bounce, you exit when the RSI is over 45. You get the idea. When I explain the exit strategy for this trade system to people, a lot of times the immediate response is, Trey, you don't have any stop loss? The answer is no. There is no stop loss built into this system. Guess what? There will be times where you get smacked in trades. This is the S&P 500 ETF in 2020 during COVID. The strategy gets smacked. Let me do my best to explain something here to you. You are only allowed to make money trading stocks because you are able to take on risk. There is no such thing, and there never will be such a thing as a trade strategy, as a profitable trade strategy, should I say, that doesn't have a massive con to it, that doesn't have a major risk. In the case of this trade strategy, of course, that major risk is the no stop loss and the opportunity to get smacked in trades. Your job when building trade strategies is to balance out that major risk with the reward. And in the case of this strategy, once again, that reward is an extremely high win rate. So given enough time, even though, yes, you will take on some of these trades that smack you in the face, given enough time, this strategy has proven to still remain profitable. I'm about to showcase what the strategy would look like with a couple of different stop loss ideas here in just a second. But first, let me add on to that conversation and just explain that I am a huge believer in trading multiple different strategies, and not just multiple different strategies, but multiple different strategy types, because each type of strategy, be it a reversal like this or a continuation strategy, etc., have their own set of cons. The con to a continuation strategy is typically that the win percentage is much lower. So you can have 8, 9, 10 trades in a row where you lose. And that is, once again, the major drawdown of those systems. And when you begin to trade multiple different types of strategies together within your portfolio, they help to even each other out. And also, if you're trading multiple different strategies, it means that you won't be in like your entire portfolio in trades like this. Yeah, maybe you do get smacked in a trade like this, but if it's only 20% of your portfolio and you take a whatever percentage loss this is, a 19% loss, how much of that portfolio is it really? It's 1/5 of your portfolio and you lose 1/5 of that money. I'm not good at math, but it's not actually that big of a smack in the face as it looks on the chart here. So the first and most obvious stop that people tend to like to bring up when looking at this strategy is, Trey, well, what if you sell if the price closes below the 200 simple moving average? So I've gone ahead and built that into the strategy. Take a look at the statistics now before I turn it on. 91% win rate, up over $13,000. If I come in and I enable that stop that I added, once again, we will now stop out if the price closes below the 200 simple moving average. Our total P&L goes down 30%. We are now only up $10,000, and our win percentage drops down to 81%. And you'll also notice our max drawdown percentage went from only 19% up to 17%. So yes, the max drawdown got slightly better with this stop loss, but in my opinion, doesn't offset the 30% change in total P&L or 10% less change in win percentage. So while it looks good in this one scenario in 2020, this stop loss looks very good. Whenever you're back testing, whenever you're optimizing strategies, I mean, really the entire point is that you are getting the larger picture. You're taking all the data into account, multiple different market scenarios. I mean, right now we're looking at the entire chart. So this is everything the S&P 500 has ever been through, not including that 200 SMA stop loss, makes the strategy perform much better over time in every single market scenario. What did I turn off? What did I break? Oh, I disabled my buy, sorry. Disable the stop. Makes it better in every single market scenario over enough time. We're not gonna jump in and build this strategy step by step or anything right now, because as I mentioned earlier in the video, I actually am going to give you all the share link to this strategy. It is linked in the description of the video down below. Once again, just paste that into your open shared item, and you can have this strategy for completely free. I will just say, if you love it, if you turn it on and you're like, holy crap, Trey, this is awesome, please consider signing up to the site. You're going to get access to over 130 other codes like this, not to mention maybe the most important, these backtest labels up here. This is a custom code that I built, and it is extremely important for building, testing, and optimizing strategies. But anyway, that's obviously the best way you can pay me back for giving you all this code for completely free. Anyway, now we are going to hop on over into the scan tab of ThinkorSwim, and this we are going to build step by step. So you'll get this for free too, but let's go ahead and build it, because what's the point of an amazing strategy if you can't find the stocks to trade according to when they're aligning with the strategy? For starters, I have a couple of common stock filters turned on. I use these filters on almost every scanner I build just to keep a lot of the riffraff out, a lot of the crap, non-existent results that you would never like to trade anyway. I have the minimum volume on the day set to 1 million, so the stock must have traded at least 1 million shares on the day, and the minimum last price must be $1. So I don't want to see any penny stocks. If I go ahead and run this scan, you will see we're at 718 results. So already sort of limiting down from the tens of thousands of total stocks and bonds and warrants and other crap, ADRs, this, that, and the other, all that is out there, down to just the really 718 types of stocks that you might like to trade. Now we need to build the meat and potatoes of this scanner. We need to build the chart setup that matches the rules I explained for the strategy. To do that, we're going to come into Add Filter. This time, instead of Stock, we are going to go to Study. We're going to click into the pencil icon, hop into the ThinkScript editor because we are going to now write a line of code together. Don't worry, it's a very simple line of code, and I'm going to walk you through it step by step. Remember, our first check for the strategy is that the low of the current candle is above the 200 length simple moving average. Easy enough. All we need to do is reference the low of the current candle, which within ThinkorSwim, all you need to do is type in low. The 4 data points given to you by a candle, open, close, high, and low, can all be simply referenced this way in ThinkScript code. All you need to do is type in which of those keywords you would like the data of, and the code will pull it in. We need to say this is greater than, and now we are going to use the simple moving average study function. Every single study that exists within ThinkorSwim can be called in this way. You simply type in the name of the study as it appears in the studies chart, and you open and close parentheses. That lets the machine know that you are referencing a function, and you have, of course, copied the name of the study, so the machine knows you are referencing that specific function. Now, we're not getting any errors right now because the simple moving average function has a full set of default parameters, meaning the settings of the study function itself are all filled in. However, by default, the length parameter of the simple moving average function is set to 9. We, of course, need to change that parameter to 200. So I'm going to type in length, as that's the name of the parameter I want to change, set it equal instead to 200. And I do that within the parentheses of the study function. That is where you can change and update parameters of the function itself. So our first check is now completely built in. The low of the current candle is above the 200 simple moving average. Now remember, the second check of the strategy is that the RSI on the current candle closes below 40. We can build both of those checks in one line of code by using the keyword and. This will append both of the functions, or statement, should I say, on either side, in which both of them must be true now in order for stocks to appear on the scanner. So once again, all I need to do here is reference that RSI function. So RSI, open and close parentheses. For our RSI, we don't change any of the parameters from default at all. We use the RSI just as it comes out of the box, just as you turn it on the chart. So we don't need to worry about changing anything inside these parameters. All we need to do is simply say that the RSI is less than the value of 40. And there we have it. We have our macro check that the low of the current candle is greater than the 200 SMA, and our currently dip check that the RSI is less than 40. Just quickly, by the way, if you enjoy the way that I talked through that line of code, it's a great segue into my How to Code in ThinkorSwim course, in which I have 10 chapters and 36 sections. And every single section comes with a video lesson built by me, as well as a text lesson. This course will take you from knowing literally nothing about coding or ThinkorSwim in general, all the way down to being able to code exactly the way that I do with my 5 years of experience. So if you're interested in learning how to build these codes yourself within ThinkorSwim, the course link is available on the homepage on my website. Once again, linked in the description down below. So if I've built this correctly, if I go ahead and hit OK so that that custom study code is now running and loaded into our study filter, and I run the scanner, we should be only seeing stocks currently aligning with the reversal strategy. As you can see, we went from like 718 results now down to only 19. This is a list of 19 stocks that are macro strong, but currently on a dip, providing decent opportunity for reversal bounces. What I then like to do with this list of stocks is sort it ascending top down by volume. I find that the larger the stock, so like I see Meta on the list, but like if Amazon, Nvidia, Google, those kind of stocks are on a list like this, those kind of stocks tend to give you more consistent moves. They're a little bit more predictable. You're not going to get as crazy volatility on them, but I would rather target higher predictability than crazier volatility. Of course, that's a little bit more subjective and a little bit more up to you, but this is how I sort my scan results for this reversal scanner. You may notice too that I also have this shares column turned on my scan results. I want to see sort of the overall total number of shares available that the stock has out on the market open. I want to see, once again, the largest companies, as once again, I believe they are the most predictable. So actually what I would do in this scenario, I mean, we'll take a look at them, but what I'm going to assume before even taking a look is that IONQ and BBAI, the first two results on the list when sorting by volume, actually aren't going to be amazing setups. I can see here from the percent change that one is down 5% on the day and one is down 4%, and they each respectively only have about 250 million shares available on the open market. That doesn't make them nothing stocks, but when I see names like Meta and Walmart also on the list, I much more am interested in going down and looking at those stocks. I'm going to assume these first two are just sort of getting really beat down right now. Like they were probably stocks that were really, really hot and now they're getting really, really beat down. Not necessarily something I'm looking to take advantage of with a strategy like this. Let's go take a look and see if I am correct. IONQ, I am pretty correct. I'm not going to lie to you. I sort of knew IONQ because I was watching it during this move. So I knew it was a hugely running up stock. And yes, it's just a stock that went straight up and is now getting crushed. I don't really love that sort of setup for a reversal. I'm looking for a little bit more consistent trends, which once again is why I'm more interested in the bigger stocks. But let's also go look at BBAI. This is another same story. Made a huge move up and is now just on the backside, huge move down. So once again, not like a great setup for this reversal. Next on the list was Walmart. This is a little bit more so, actually, I'll tell you what, Walmart doesn't actually look that impressive either because this sort of made a huge run up and is making a huge move down now too. But I would be much more willing to enter Walmart because it is a just much more massive stock. I have a lot more faith that Walmart is going to bounce and is going to come back up than I am BBAI and IONQ, right? Another stock that was on the list is GILD. We go over and take a look at this one. I mean, this is another one. Huge move up, huge move down. But you can see on Walmart and GILD, the statistics are much better. GILD has an 80% or 78% win rate. Walmart, funnily enough, also has a 78% win rate. So these are stocks I would be more interested in looking at. What else is on the list that has a large number of shares? Starbucks is also on the list, over 1 billion total shares available on the open market. This is another one sort of getting hammered right now. It's a little bit of a funny time to be looking at reversal trades. Everything's getting sort of a little bit hammered right now. If we go look at the S&P 500 ETF, the entire market's getting a little bit hammered right now. So everything's going to look a little wonky, but hey, that's okay. Maybe this is the time to be buying dips like this. I mean, you see now on Starbucks, we've already entered 1, 2, 3, 4, 5, 6, 7, 8, 9 times. I'm only able to enter one more time on Starbucks before I have to hold and wait for my exit. And those are the trades, when they bounce, of course, those are the trades that really make you the most money in a strategy like this, when they really pull back hard and give you a chance to scale in, scale in, scale in, scale in. So stocks like Starbucks and Walmart and even GILD, I like, and we'll see if they get bounces anytime soon. I'm making this video on March 20th, so you can come back in like a week or two and laugh at me if these stocks don't bounce, but let's see what happens on them from here. As I mentioned at the very beginning of this video, you really need to spend no time on the charts at all in order to trade this strategy. You can run this scanner 10 to 5 minutes before close, see what stocks are popping up on it. If you like any of the setups, you can decide to buy them. Then, of course, you would also take a look at the stocks you're currently holding with the RSI turned on. And if they are closing above 45 on the RSI, you would go ahead and sell those into close as well. And that's it. That takes about 5 minutes. It's very, very easy. This is a great trade strategy for those of you that, still work your 9 to 5s. You don't have all day to spend sitting around watching and actively trading the market. Something like this could work very well for you. Buy dips on strong stocks and target the bigger names. Target, like we said on the scanner, your Walmarts and your Starbuckses over your BBAIs. Do all that, and hopefully this strategy will work for you and this becomes something that you can add to your trading arsenal. If you did enjoy this video, if you learned something, please take the half second to hit the like button. If you would like to continue learning for completely free, hit the red subscribe button down below. It's completely free. Why wouldn't you do it? With all that being said, I'm going to go ahead and sign out of this video, and I'll catch you all in the next one.